All right, welcome to the TradeStation Masterclass. This is our Platform Essentials series, and we're going to highlight one of the features in TradeStation that allows you to enter the market with different scenarios involved. So it involves, of course, OCO functionality to make sure that if one scenario is met, that the other side of the order gets canceled. And we're going to take a look at all the intricacies and all the different scenarios that you can play with in order to use these templates that are offered by TradeStation. So before we get started, the usual disclosures, keep in mind that every symbol and idea that I talk about in this presentation is for educational purposes only, and it is not a recommendation of TradeStation. Also, that active trading is not suitable for everyone, especially if you're trading more of risky products like options and futures, that past historical performance is no guarantee of future results. For additional information on these disclosures, please make sure to visit our website, www.tradestation.com/important-information. You can see the link right there at the bottom of the PowerPoint slide. For those of you that don't know who I am, my name is Jesus Nava. I'm the Director of Client Training and Education at TradeStation, and it's always a pleasure to talk about TradeStation and show you some tips and tricks on the technology. So let's go ahead and get started. I'm going to switch over here to the TradeStation platform. And I want to say that, of course, the chat is open for questions. Usually when we do a session like this, we try to keep the questions related to the topic. I did see a question last minute, and I'm glad that Prasad, you are here in class, because it was not my intention to ignore your question. I know that you were sending a question in through customizing intervals and time frames. And just to let you know, the drop down that you use in charting, the time frame drop down, that cannot be edited or modified. So if you wanted to add some custom time frames to that drop down, unfortunately, that's something that we don't support. I know that if you are in the mobile app, you have the ability to go into the time frame menu and add the ones you want, but that is something we don't provide. It's strange, right? That we provide it on the mobile app and we don't provide it on the desktop. So just wanted to make sure that I address that question so that you don't feel that I was ignoring you. All right, so let's go ahead and get started here. Entry OCO. These are some of the templates that not many TradeStation users use. And I'm not sure if it's because they don't know they are there or they don't know how to use them. Maybe they're not really comfortable with the functionality. So I decided to maybe highlight some of them here in this class so that we can understand how they work and where they are, they're going to be accessible from different places. So let's go here to apps and open up a matrix. First of all, matrix. Here it is. And we're also going to open up a chart analysis because they're also available from chart. Of course, all the order entry in charting is only possible if you enable chart trading. So let me show you where they are. First of all, here on the matrix, you find them right here under the OCO order button. This is all grayed out because I have a symbol here that cannot be traded. So let me switch to something different. Let me go here to Bank of America. I have a position on Bank of America. I'm going to close all my open positions. I usually like to start with a blank slate. So I'm going to do Control F12. No? Are my order entry things blocked? Let's see, that's strange. It doesn't respond. Control F12. Doesn't even give me a message. Well, Control F12, if I go to here, View Shortcuts, and I go to Hotkeys, I know that for the command lines, there's one command line that says Close All Positions. It doesn't have the assignment. Let me go here. I'm not sure why, because it should be automatically assigned. Let me assign it and click on close. Now let me do Control F12. Says, would you like to run the close all positions macro? I'm going to say yes. Okay, and that gets rid of my positions on Bank of America. All right, so you guys see that under the Place OCO Order button, there is a drop down, and there's 4 that are named entry. So these are the ones that we're going to talk about. Entry BF buy, entry BF sell, entry breakout, and entry fade. If you're using chart trading, same location, under the Place OCO Order, go to the drop down and you find them there. Same 4 that we just mentioned in the matrix appear here in the drop down for chart trading. And they also show up if you come over here to the trade bar. Let me pin it here to the top. If you go to the trade bar and you click on the OCO OSO button, you're going to see that at the very top, we have the entry breakout fade, entry breakout fade, and then you have an entry fade. So the top 4 right here on this button are the ones that you also find in matrix and you also find in chart trading. Are they basically the same thing? Yes, they're exactly the same thing, regardless of the order entry you use. The nice thing is that if you go here to the trade bar at the very top, everything is spelled out. You know, on the matrix and in chart trading, when you go to entry, the very top one is a BF, not the top one, but yeah, the very top one is an entry BF buy. You can see the same thing here on the matrix. If I go over here to this button here on the trade bar, everything is spelled out, but it doesn't match the order here. The BF is actually breakout fade. BF stands for breakout fade. So it's a combination of a breakout setup with a fade setup. So you're going to see that you have an entry OCO fade, you have an entry OCO breakout, and then you have 2 entry OCOs breakout fade, one on the buy side and one on the sell side. That makes up the 4 OCO entries right here on this dropdown. Now, if you're interested in looking at a graphical representation of these entry templates, come here to help, get help, platform trading. And let's go here to entry OCO. Okay, bracket orders, entry OCO breakout with exit bracket, that's an indicator. OCO and OSO templates. Let me go in here. Here they are. Okay, so that's a topic that I wanted to access. This is the OCO and OSO templates because it gives you a little bit of a graph of what the order is trying to do. Let me see if I can make this a little bit bigger. So let's take a look at the very top one, which is an entry breakout. The entry breakout is this type of setup. You see the box where it says current right there in the middle, the yellow box that says current. That is where the current market would be. So you have price movement right there in the middle. So what you're looking for is for a breakout to happen. There's a breakout to the upside or a breakout to the downside. And you have these black lines identifying a certain level. So these are, pretty much levels that you identify on the chart, maybe some support and resistance levels. And what you're trying to do is you're trying to keep an eye on these levels so that if they're broken, you're going to be in a position. And the reason why you need an OCO, it's probably because you don't know which level is going to be broken first, especially, if the market has consolidated and the levels are pretty close to each other. Sometimes, we may have a bias. We may know we may have some indicators that tells us, where the pressure is if it's on the buy side or the sell side. But sometimes it is uncertain where the breakout is going to happen. And that's why you need an OCO. This is the type of trade that you put on, establish, and you just leave it and wait until it develops and turns into a real position. But what happens on this trade, as you can see here on the far right, on the top side, if it breaks the top side, it's going to do a buy stop. Buy stop because we are entering a buy order at a price that is higher than where the price is at the moment. So in order for you to buy something at a higher price and wait for the price, it has to be a stop order. And the same is for the sell stop, for the sell short stop, to be more exact, because this is, you don't have a position open. This is like an entry, a sell to enter the market, which is a short, right? So on the short side, you're going to sell it, of course, with a stop price, because you want to make sure that the price reaches that level or breaks the level before you're into that trade. And that's why the order in itself is called an entry breakout, because that's exactly what you are expecting. You're expecting a break on those levels. Let's take a look. And how do we place that on the chart? Okay, so we did establish already that the entry OCOs are available here on the matrix, trade bar, and chart trading. Guess which one we're going to put it on? I'm going to choose the chart, just because we get a little bit more visibility on where the lines are in relationship to where the market is. Okay, so let me close out of my matrix. I'll unpin my trade bar, and let me go ahead and resize my chart. Okay, so let's say, for example, that we are monitoring the prices for Bank of America, and we're taking a look at some lows and some highs. We're taking a look at maybe the price here at 46, which it touched. It didn't actually break it. Let's go ahead and draw a horizontal line right there at 46. Okay, and I'm also going to be taking a look at some of the low here at 45. So it kind of touched, 45, but there's not much activity at that level. So I'm going to also monitor that. Drawing horizontal line, and then draw it here at 45. So we have a level at 46 and we have a level at 45. This is just an example. I haven't done a lot of study on this particular idea. I'm just speaking, where the price has gone since the market opened for Bank of America and how far down it went since the market opened. And I'm going to use those levels. See, at the moment, the market's kind of trending sideways, at 45, 50, somewhere in the middle. So let's suppose that we're going to be monitoring the 46 and the 45 and just waiting for a breakout of those two levels. How do we set that up? Well, we know that over here in the drop down, we do have one that says entry breakout. That's the one we need to select. That's the one that's going to buy up here and sell short down here. Let's go to the ellipsis, because that's where you set the distance of those stops. These are types of orders that are going to be a little bit complex to set up if you are shooting for a specific price. Why? Because when you go into the settings of this OCO entry, this is going to work with price offsets. And as you can see, the price offsets are going to be, it's a specific amount, and they're going to be set from the current trading price. So at the moment that you send, that OCO is going to look at the current trading price. And then based on the offset, that's going to establish your buy stop and your sell stop, which is not, very accurate, because I can sit here and try to figure out, how many cents from the current trading price do I want my buy order, and how many cents from the current trading price do I want my sell order. Well, I know the current price is 45.38, but it's changing as we speak. So by the time that I set my order, I may be off by a penny or two, which is okay, not a big deal. I just don't like the fact that it's not really precise. I cannot enter a price here. I cannot say, I want my buy stop to be at 46 and I want my sell short stop to be at 45. I'm just complaining a little bit here about functionality, but it's me. I'm just venting a little bit. I'm not sure if you guys feel the same way, but I wish there was a setting here for me to specify that. So here I have to then say, okay, so it is 45.40. I'm going to set my buy 60 cents away. So buy 60 cents away. And I'm going to set my short, I'm going to set it 40 cents away. Which makes sense, because what I have here is two horizontal lines that make a channel. And the channel is from 45 to 46, so it's exactly $1, right? So if you add the offsets here, it's exactly $1 offset. 60 cents plus 40 cents, it's $1. Once I set my orders, I'm going to click OK. I'm going to change the duration of those orders to GTC. Now, whenever you have a, well, maybe not a GTC, maybe just a day order, because these are levels that I established for today. I'm looking at the high for today or the low of today. So I want the orders to be filled today based on that interpretation. But if you're looking at levels that are a little bit more significant based on market movements in the past, maybe you want to set those orders to be there for not only today or the current trading session, but maybe more days, just to wait for that breakout. But it's up to you. The duration of the order you have to choose. I'm just saying that for this example, since I picked levels that were just traded today, I'm gonna make the orders just trade today. I'm gonna drop the quantity here to just 100 shares. Doesn't really matter, but 100 is just a round number. It makes it simple for me to do the calculations. By the time that I've explained all this information, the current price has moved away from where I calculated my offsets, which is okay. I can still submit the trade. How do I submit that order? All I need to do is, well, first of all, let me go ahead and uncheck this. I don't want to attach any OSO. That's one of the things that I forget the most when I send an order using chart trading or the matrix. I usually forget to check the attach OSO, and sometimes I have it checked and I don't realize this. And when you send an order, it attaches all these other stuff that I wasn't really ready to see. So good thing that I looked up there and I saw the checkbox checked, and I'm unchecking it because I want to concentrate on the entry orders first, and then we'll talk about attaching other exit orders if we want to. All right, how do we place a trade? We just click on the gray button here that says place OCO order. I click it once and the orders are in. Did I miss the levels? Of course I did. I knew I was going to miss them because by the time I calculated the offsets, the current price had already moved, which is no big deal because, chart trading makes it very easy for me to adjust those orders very quickly. So I can grab my buy order at $45.94 and drop it at $46. And I can grab my sell stop and drop it at $45. And maybe I don't need these horizontal lines any longer. So I'm going to press delete on the keyboard. And now I see my channel. Buy order here at the top, sell short here at the bottom. If you were to do this order using the trade bar, you have a little bit more flexibility. That whole problem of not being able to specify a price is gone when you use the trade bar. You're going to have this same problem if you set the orders on the matrix because it only works with the offsets. Let me cancel the orders and try to put in that same trade, but using the trade bar, and then you can choose which one you feel more comfortable with. So over here, I'm going to go to the trade bar. I'm going to go to the OCO OSO order. I'm going to go to entry breakout, and I'm going to set it with no exit order. So this is exactly the same setup that we set right here in the chart analysis, but I can just modify the quantity here on the fly. And for the limit, I don't have to deal with limit offsets for, well, these are both stops. So you can see the prices over here on the right-hand side. I don't have to deal with limit because these are both stop orders. So for my buy order, I can just enter 46. And for my sell short, I can just enter 45, and that's it. Isn't that great? You can go to the drop down and choose some other pricing behavior, but what I want here is just a raw price. I'm going to send the orders, and I don't see them here. Were they sent? Let me try that again. Breakout, no exit. Oh, I probably clicked on stage to order instead of send orders. That's what happened. So let's go here to trade and go here to stage. Yeah, it's right here. I clicked on the wrong button. So let me go ahead and send them. And here they are. A buy at 46 and a sell short at 45. So yeah, the trade bar at the top, the one I usually, say that is not really, you don't see a lot of information. You don't see, you're not placing the trades in context with what's happening in the market at the moment. That's the one that gives you the flexibility of entering the price, which is pretty cool. So if you're shooting for a specific price rather than offsets, yeah, the trade bar is going to be the much better option for you because it does provide you that flexibility. Of course, let me go ahead and cancel out of this. Ideally, what I want is also to attach some exits. So I can come over here where it says attach OSO, maybe do a profit target and a stop loss on each one of those. If I go to the ellipsis here, each one of those targets and stops are set to 10 cents. Very tight. I know that maybe on this particular example, maybe it's not the best approach. Who knows? Maybe that's exactly what you want to shoot for. I'm going to leave it at 10 cents so you can see how all the order lines get placed. But some more work needs to be done here to choose what the profit target and the stop losses are going to be. But if I check that, and then I place the OCO order, you get this. You get a total of 6 different orders being placed with one single click. Pretty cool, yes. Very, very, very cool because you're able to set up a trade that you can just leave. I mean, you've planned it. You know what the expectations are. You know what your risks are because you're setting some exits on stop losses. You know what you're going to be happy with because you've set your profit targets as well. And that's it. You just leave the trade and you let it play out. Whichever scenario plays out, you're going to be okay with it because you planned for it, which is pretty cool. So again, I see my entry orders. That's the blue at the top. The blue is the buy and the red is the sell short. And the other orders are gray because they are still queued, because they are connected to a primary. It's not until you get filled on that buy order or the sell short order that the other 2 orders get activated. Again, remember this is an OCO. So if one side gets filled, then the other setup gets canceled. And when I say the other setup, I mean the other 3 group of orders. Pretty cool as well. So yeah. So again, the entry order here is at $45.93, not exactly at the $46 that I wanted. And the same happens here for the sell short. It's at $44.93 instead of the $45 that I wanted. But this whole setup can also be set on the trade bar. Let me cancel out of this. Go to my trade bar, OCO, OSO. I'm gonna go here to entry breakout at the very top. And instead of doing a no exit order, I'm gonna do an exit bracket with 1 limit and 1 stop level. And this is what it looks like. The main entry orders are right here. One right here at the top, the other down here. So it does give you a very nice visual of where the orders are and how they are connected. And it uses indentation to pretty much give you a breakdown of hierarchy. You know, we have the 2 main orders, the buy and the sell short. I can change the quantity here all to 100. And for my buy order, again, I wanted 46. For the sell short, I wanted 45. I got my offsets here. So for my target, I have 10 cents and 10 cents. So it does use the same default, but you can use the same offsets, or you can put in specific prices too. That's another thing that the trade bar is good at, that for any stop loss and any profit target, you have this ability of entering a specific price. So rather than working with an offset, you can just use a custom price and say, I want my limit to be at 46.25, and I want my stop to be at 45.75. I'm using a little bit of a bigger offset. I'm using about 25 cents, which is okay. So here, if the sell short gets filled at 45, I want my target to be at 44.75, and I want my stop, okay, 44.75, and I want my stop to be, make sure you enter the price in the stop column, not the stop offset. If you put it in the stop offset, it's not interpreting that as a price, it's interpreting it as an offset. So if you put in 44 here, 44.75, it's going to add 44.75 to the current trading price, or subtract, 44.75 from the current trading price. So make sure that you do it on the stop order. So for my stop is going to be at 45.25. So this is, I did the same order a little bit differently because I'm not using offsets. I'm using real prices for everything. And all I need to do is maybe I need to set my target on my stop to GTC. If it does establish a position, I want those orders to be GTC. I mean, the profit target and the stop loss. So the only ones that I want as a day order are my entry orders, so that if they don't get filled today, then I'm not interested in Bank of America anymore. Let's go ahead and send those orders. And here we are. You see how they look on the chart? It doesn't matter which order entry tool you use, they are all interconnected. I placed the trade using the trade bar. You can see how it very nicely shows on the chart. In fact, I can use and continue to use the chart to modify that trade setup and keep an eye on it and see what's going on. You can see how the price is inching closer to my entry. So based on what's happening over here, it seems like it's going to reach my sell short before it reaches my buy order, which would be very interesting to see in real time. But we're just going to let it sit here for a while and let it play. Any questions so far? I don't see any questions right there in the chat, so I'm going to assume everything is clear. Let's go to the next setup. And since we already talked about different places where the entry templates can be found, and we've talked about some of the limitations of the functionality and how the trade bar allows you to enter real prices or exact prices, let's put it that way. Sometimes I know a lot of traders that think about just exact price. I want to exit at $45. If that is you, then sometimes these setups make more sense if you do them on the trade bar. Let's open up a new chart. I'm going to leave that chart of Bank of America working there. So let's go here to apps, chart analysis. We're going to go here to Twitter. Twitter is trading at $35. All right, it's been a down date for Twitter. It's down almost 5%. Okay, and let's go ahead and enable chart trading. Okay. When you're entering, buys and sells and creating some sort of a channel, sometimes it's, just for demonstration, I don't like the fact that my Twitter is reaching the edge here because sometimes it's difficult to see the orders. Let me see if I find something else that we can work with. Okay, this is AT&T. I like this. Just for demonstration. I'm not saying that I like it because I like AT&T for trading, just because it gives me some sort of a sideways movement here. It's I can see a channel. The top here is 27. And even though we had some activity here at 26.70, I can see, price movement. I guess 26.70 is a good bottom for this channel. A little bit higher, and though, the prices are kind of getting closer to, and it's, updating real time, but let's work with this. Let me go back to this document. This is the document that I got from the TradeStation help, so everyone has access to this. In fact, let me go here and copy the link and paste it here in the chat so that you guys know exactly where this is. If you click on the link, it'll take you directly to this page, but everyone can access the help by going to help get help, and platform trading. And what I searched for was entry OCO. It actually took me to that document. The next template would be this one right here. Let me push it up so we don't get distracted by any other color. So we have the entry fade OCO template. So now we went from breakout to fade. What is fade? Well, take a look at the graph here. We have the current market right there in the middle. You see the arrows pointing inward, which means that the market is not going to break the levels that you have identified. What it's expected to happen is for the price to bounce off of the levels that you've identified. So you are expecting for the market to continue to trade within the channel. So what you do is you set up a trade that fades. Rather than going long at the very top of the channel, is going to go short at the top of the channel, because what I think is going to happen is just going to bounce and come down, and you're going to make some profits on that short side. And if it goes to the bottom, instead of selling short, what you're going to do, you're going to buy, because instead of breaking, you think that the price is just going to bounce off the bottom band, and it's going to go up, and you're going to capitalize on that upward movement. So you can see that this type of entry has a sell at the top and a buy at the bottom. And it's expected to continue to do that going forward. So let's go here to my chart. Let me draw some horizontal lines. So we said that maybe we're looking at the 27 level. And another one, let's take a look at the 2670 level. All right, that's where the price was at the very beginning of the day. It's kind of moving sideways. We have a channel of 30 cents for AT&T, which is about 10% of the price of the stock, a little bit over 10% of the stock. Really? No, 1%, 30 cents. Now my math is wrong. So let's suppose that AT&T is trading at $30. So it is 1%, not 10%. 1% movement. All right. So 30 cents is it's 1% of $30, which is what the price of AT&T is close to. So let's go ahead and take a look. We're going to do a fade trade. So we're going to expect AT&T to bounce back and forth between those two yellow lines. Let's go here to the drop down for place OCO order. We're going to do an entry fade and click on the ellipsis here on the right hand side. Again, we have that challenge that this is working with price offsets. The current price is 26.77. So the offset on the buy side, it's going to be about 7 cents, right? And the offset for the short side, it's going to be about 23 cents. Okay, we do know that the channel is about 30 cents. So 7 cents plus 23 cents is 30 cents. When I click OK, and again, the market continues to update. So if I place this OCO, it's going to be off by a little. Yep, you can click and drag just the same way that we did before. But if you really are shooting for prices, then let's use the trade bar. Trade bar, OCO, OSO. We're going to do the entry fade with no exits. So we're going to do this for 100 shares. My buy order is going to be at 26.70. And my sell order is going to be at 27. Once I do that, I send the orders, and I'm right at the levels that I drew. Does that make sense? So now I can remove the levels if I don't need it anymore. I can make that a little bit more transparent. So sometimes those levels are useful because you've identified them. So you're seeing me that I'm deleting them, but if you want to make them a little bit more transparent, you can. So if I go here to horizontal and I draw it, I remove it because it kind of obscures whatever line is there, but double click on it. On the style tab, you have a transparency slider. I can make it 75% transparent, maybe 70, maybe 70 was too much. And you can see that it tones down the yellow, and I'm able to see the order line right here on the right-hand side. The other problem is that it doesn't allow you to click and drag the order line if you wanted to do something quick. So most of the time, if I'm looking at levels and I want to have orders right on top of those levels, I either move it away from the level, maybe a little bit closer, so that I can have access to the order and move it if I need to. Because if you put the line right on top of the order, then you'll have this challenge of, okay, which one is it that I'm dragging? Am I dragging the horizontal line, or am I dragging the order line, okay? All right, so those are that one. The one that you expect the price to continue to trade within the channel. The next two is a combination of both setups. Let's go and take a look at, this is the breakout fade buy. It's called the breakout fade buy because it's waiting for a breakout on one side and a fade on the other, but it's on the buy side. So this is a bullish setup. Both orders are going to be a buy order, but one is going to be a buy stop looking for a breakout, and the other one is going to be a buy limit looking for a fade. You're bullish. You think the market's going to go up. You're just not sure when exactly. Is it going to go straight up from where it is right now and break that resistance level? Then you have a buy stop in place. But what if it goes down and then it bounces off of the support level? Then you have another buy order right there at the bottom to improve your entry price. That's the whole reason why we have this setup. They're both buying transactions, but one is going to get you a better price than the other. But you still want to get in and be long regardless, you know? So that's exactly what that is looking for. What does it look like? Again, I can come here and use the same channel of 27 and 2670. If it goes to 2670, I'm going to go long. So let's go here to the trade bar, OCO, OSO. I'm going to do the breakout fade buy, trade, OCO, OSO. I forgot that sometimes you don't have to click. Just go through the menu without clicking. Otherwise, it just closes the menu on you. And let's do without exits. I'm going to do the limit at 2670 and the stop at 27. Let's send the order, and I should get filled in a moment there. Let's see. If I wanted to, it's a 2671 at the moment, so it's kind of dropping a little bit. If it drops to 26, oh, there we go. It filled me. You can see that. And on the other side, the order just went away. It disappears. It's an OCO. It met the bottom side. I'm in a trade. Okay. And let's let it play here. You know, let's see. Let's sit here for a while. If I look back at my Bank of America trade, yeah, it kind of just went sideways from there. It, you know, went down a little bit, but now it's going sideways again. My AT&T is losing some money at the moment, flat at the moment. So let's just leave it there for a moment. Let me open up another chart here. Actually, I don't want it to have another chart because I wanted to use the same example. You know, let's close this trade and let's open up. And we're going to use the same setup, but backwards, you know, because you may be bullish, but there's other people that may be bearish. And they could be saying, hey, if AT&T breaks 2670, then it's just going to go down. But if it goes up to 27, all it's going to do is bounce and go down again. So if you're bearish, you're getting ready for both scenarios. And that's exactly what the other side of the template does. Right here, if I go back to this document, on the graph, you can see that the two levels are there, but both orders are sell short transactions. One with a limit, the other one with a stop. The stop, of course, is the one that is looking for the break. You know, if it breaks that level, I'm short. But then if it goes up and bounces off resistance, then you're short regardless, but you're short at a better price and you're just getting ready for that level. How do we set that up? Again, I go to trade, OCO, OSO. This is the entry OCO, breakout fade on the sell side. Oh, I clicked and it just went away. So again, sometimes if you click, it'll go away. So I'm going to go here to entry OCO, breakout fade, sell. And this time I'm going to work this with a one limit and one stop level. So for the limit, it's trading at 26.70. So let's do 26.70. And for the stop, we're going to do 27. For the profit target and the stop loss, I'm going to work with the offsets. So I'm going to do 10 cents. Let's see how this works. I'm going to send the orders. Order rejected. And I get rejected because I had gotten filled already. So it was two things happened here. I sent the order really close to where the market was. It actually filled me immediately. So by the time that it was ready to send the other orders, they were invalid and it rejected those orders. So it was my fault. I should have picked a price a little bit further away from where the current price was. You know, if you do that sort of thing where you're sending orders right at the price, then sometimes stops, you know, will generate an error because they're not valid, okay? Any questions on this functionality? I wanna make sure that it's clear, but we have 4 entry templates that, as I said at the very beginning, are not used a lot, but it does allow you to set, you know, these entry orders on different scenarios, on breakouts, on fades, and combinations of both breakouts and fades. So that's my trade right there working. It's a short trade, so it's already losing some money. It's okay. And on Bank of America, you see the market decided to go up a little bit. So that's totally fine and reached that same level that it was at when we first placed that trade, which is cool. Interesting that when you place these orders, the order are kind of anchored on the bar that you set them at, which is cool because now you see how the new candlesticks are forming in relationship to the order lines. I like that. All right, guys, this is it. This is my class today. This is entry OCO, so I hope that you guys liked it. This, of course, closes the session for not only the day, but for the week. Today is Friday. Make a note of next Friday because we are going to have a special session with James Putra. James Putra is the Vice President of Product Strategy for TradeStation Crypto. So he's going to talk to us about what's happening with TradeStation Crypto and all the interesting things that he's been working on. That's next Friday, January 28th, I believe, and it's going to be at 11 a.m. Eastern time, so 11 in the morning Eastern time. We are going to be sending out an email to all members of the TradeStation Masterclass. So you're going to be getting that email, letting you know that just to make a note. I'm not sure if there's going to be registrations for it. So make sure that you put something in your calendar or something to set a reminder so you don't forget to join us on Friday at 11 a.m. where we have this special session. We're calling it the same thing that we called it in the past, which is Executive Highlight. And we're going to make sure that we have a little bit of fun with James Putra on Friday, okay? Thank you, guys. Thank you for being here. Thank you for supporting the TradeStation Masterclass. And everyone have a wonderful weekend, and I'll see everyone on Monday. Goodbye.